Well, happy Monday. We have made it to December and want to share with you the latest data here in the Austin metro area as we wrap up 2023. And I'll share with you some of my thoughts as what we could expect possibly as we head into the first quarter of 2024. A big story right now is mortgage rates. We've been following this all year. It's probably been the headline story that's been affecting the market. But right now, the 30-year fixed is just above 7%. And while that's very high compared to where we were maybe in 21 or 22, it's a significant shift down from where we were about a month and a half ago. You can see the 15-year fixed, the FHA, VA loans are now back down to the mid sixes. So let's take a quick look at the chart. And this is looking over a year. This is the 30-year fixed rate mortgage. This is the Mortgage News Daily. It changes daily on this chart. If we go back to this time last year, we're looking at December last year. We were in the kind of low to mid 6 range, and we stayed there entering through February, and then it rocketed up a full percentage point. Then Silicon Valley collapses. It comes down almost a full percentage point. But basically from April to mid-October, it went up almost 2 full mortgage rate interest points, and it just put a lot of downward pressure on every market, but specifically markets like Austin the second half of this year. We went from the low 6s, hit 7s for most of the summer, and then from the fall, we went from 7 to 8. October 19th, we hit 8%. Had you on that date, if you go back to my videos, you can tell we weren't sure. Is it going to keep going up? Or are we going to see interest rates go up and stay above 8? Or are we going to see it start to crest and come back down? The good news is the bond market has rallied. We have seen more support for people thinking potentially that inflation has peaked, that the Fed has peaked on their rates, and that gets a lot of people rushing into the bond market to buy the bonds, which on price would be at their lowest point, and on yield would be at their highest point because they want to lock that in. And so what's happening is since then, for the last, call it month and a half, we've come down almost a full interest rate point. That is good news. I don't know yet if this is going to be a long-term trend or is it going to be another blip like the one we saw in the spring. But if it sticks, I think that's going to be some tailwind that helps fuel the market next year. This is a number of active versus sold listings. I've been sharing this with you often. This is green is how many single family homes are listed right now in the market month over month, and the blue is closed sales month over month. And again, we saw listings really climb from February, and they kind of stuck longer than normal. Normally they'll peak out in the summer, but this time they stayed longer than normal. We peaked out in September, about 11,400 listings, and they didn't really move that much. And now we're finally starting to see them drop off harder. We're just above 10,000 listings right now. The lowest point for 2023 was February. We had about 8,700 single family homes listed. Will we get that far down by February? I don't know. We're going to have to see A, sales, and sales are really anemic, but B, are we going to have a lot of sellers, enough sellers pull their homes off the market, withdraw and expireds to allow the listings to come down to then come back up? Not sure. My prediction is we're going to have a little more inventory next spring than we had this spring. If we look at closed sales, you can really see where interest rates played a role. So you have your typical spring run up, you have more sales. The median home price did go up in that window, but literally since May, which is your March, April buyers closing in May, we have seen the number of closed sales just drop with those high interest rates. As of right now, there might be a few more closed sales that haven't been marked in the MLS, but right now we are at 1,888 closed single family sales in November. I mean, that is super anemic. That is lower than at any point we had in the last housing recession. There's just very few sales. We don't have depressed sellers or distressed sellers in the market. We just simply don't have a lot of active buyers in the market because of the high interest rates. And we're going to see that probably continue through December. But next year, if rates are starting to come down, we might see that fuel buyers into the spring. This is a look at the historic sales price trend. And so I find this really interesting because I kind of look at the data, where we started the pandemic, where we peaked in the pandemic to now. So right going into the pandemic, we were sitting around 302,000. January 2020, our median home price was 302,000. From January through, call it May 2022, we went up about 85%. We got to 550,000 on median home price, almost double where we were in January of 2020. So just massive rocket ship up. However, once interest rates went up, Austin's come back down. Huge fall last year. Here's our little spring bounce. And now we've come down again. As those rates went up, it really put downward pressure. We're now sitting around 420,000. So January 2020 to today, we're up about 120,000. From the peak of the pandemic to now, we're down around 130,000. So we've given up about 50% of the pandemic gains from January 2020. We're right there. So basically from January 2020 to now, we're up about 120,000. That's about 40%. But from the pandemic peak to now, we're down about 130,000. So, we've all that interest rate stress took a lot of that float out of the market. And if you could make this chart longer, you would see there's kind of a historical trend of rates, price goes up in the summer, it kind of bounces up a line, call it a 6% line. We're getting a lot closer to that now that we've seen these prices come down for the last 18 months. And so I think we are approaching more of a bottom. I'm not saying Austin's out of this housing recession, but I do predict we're a lot closer to it because we're coming much closer back to that historic trend line. And that's typically where the market is going to thrive as we move forward. Let's switch over to rents because I have a lot of clients that are investors, including myself. So this is looking at median rents from 2017 to now. And you can see here's kind of the normal, rents go up 2, 3, 5% a year. And then you got the pandemic, huge run up in rents. And now they're starting to bump up against that affordability ceiling too. And every fall is when you see rents typically come down in the fall, just like sales prices. Stronger activity in the spring comes down in the fall. This is a month over month change from 2018 to now. And again, you can see a huge run up in rents in the spring, and they typically fall in the fall. But what's happening is you can see it's been stronger in 2022 and 2023. And this year, rents didn't go up as powerful as they did the last 2 years. So this year, we're actually on a negative rent growth than we are on a positive year over year. And you'll see that here in this chart. Year over year change in the National Rent Index. Here's the start of the pandemic. And typically before that, rents were always, here's that 2 to 3% line. Then they kind of crashed when COVID hit. Everybody got nervous. But then rents took off like crazy, just inflation on rents. But what's happened is they've come all the way back down to about zero this year. And so we've seen the rents come down. Some of that is because we're in the second half of the year. I do predict next spring we'll see rents go up a little bit. Here's the change in median rent year over year. And again, this year we're right around flat nationally. In 2020, we were down about 1.3%. But then we got 2021 up 17.6% on rents. 2022, 3.4% on rents. And so typically, I think we're just seeing that pressure. We also have a lot of inventory hitting the market, especially in markets like Austin. We have a lot of single family and apartment units coming online right now when demand is slower. And that higher supply, lower demand helps ease rental pricing in the market. So I expect Austin maybe year over year might be down a little bit on rental pricing. I do think that's going to start to flatline and go back up again in the next few years. So that's a look at rents. Finally, I want to leave you with one last thing, and this is headline confusion. So one thing that we're seeing in the market is I get people asking every day, hey, is Austin over? Has the bubble popped? Is everybody leaving now? And Austin's no longer a shining star. I would say, well, it depends what article you read. So this is a newsletter that I got just last week. It's called the Daily Almanac. I get it, I think, daily. But anyways, I found this interesting. So one of the articles says Florida and Texas residents flee due to soaring insurance costs and surging home prices. They're fleeing, they're leaving, everybody's leaving. The exodus from Florida and Texas due to these skyrocketing premiums are leading residents to seek cheaper alternatives in the Midwest. And so it mentions that we boomed during the pandemic. People from New York and California came here to, find cheaper homes and lower overall tax environment. But basically, Dallas and Austin are becoming more unaffordable. Well, some of that's true. I mean, our price I showed you on a chart went up. We're up about 40% from where we were at the beginning of the pandemic. Obviously, property taxes followed that, and insurance has also played a role. So 100%, it has gotten more expensive to live here and to live in Dallas. But is all dire? Ha. So I come down a little farther in the exact same report. Development projects, there's a partnership to build more homes and housing and retail in the Austin-Buda corridor, which is going south on I-35. Because why? They're expecting more people to move here. And then demographic movements. Austin among U.S. cities with the highest influx of millennials in 2022. According to a study by Smart Asset, Austin ranks 9th in U.S. cities with the highest influx of millennials. Over 103,000 millennials moved into the city, now constituting 40% of our population. So, it depends which article you read. So I would say take both sides of this coin with a grain of salt. These are short-term, sometimes studies. Yes, compared to the peak of the pandemic, we probably have slowed down some on growth. Compared with a longer-term timeline, Austin is still one of the fastest growing cities in America. At minimum, we're in the top 10. 3 of the fastest growing suburbs in America, according to Forbes, are Leander, which is in the northwest, Georgetown to the north, and Kyle to the south. So again, our suburbs are just booming. If you drive around here, there's cranes and new stuff going up everywhere because they are predicting that growth. On top of that, most local demographers will tell you we are on pace with our population growth to exceed San Antonio within the next decade. So again, do your own research, but I would say the headlines are to get your attention on both sides. And I would say just look at the data, look at the longer term trends, and figure out, if you're buying housing or if you're buying investments, where that makes sense. The big story to me to follow as we enter 2024 right now is going to be mortgage rates. Are we going to sit at 7% as we enter the new year? If so, I think that's actually a bit of a tailwind because we will believe, A, hopefully that'll stay steady, and B, we'll start to realize we've peaked past that 8% range. On top of that, Austin's price continues to soften as we get through this winter and enter into the spring. That means we are at a lower price than we were starting 2023. And to me, that means it's going to be more affordable, especially if interest rates are coming down, for buyers to make offers and get into the market. So I'm cautiously optimistic we're actually going to have a slightly stronger spring than we did in 2023. But of course, that's all predicated on not going into a recession, having more job loss and stuff like that. So pay attention to those headlines. I think that's going to be critical. If you want to follow all these videos, please check out our YouTube channel at Ryan Kelly Group. We post every single one of these weekly videos there. And please hit the subscribe button, and you can make sure to get them in your inbox every week. On top of that, if you know somebody planning to buy, sell, or invest in the Austin area, especially here in the next few months, would love the opportunity to talk with them, talk in more detail about some of the strategies for listing or buying in this market. Until then, I hope you guys are gearing up for a great holiday season. Would love to visit with you soon. Until then, enjoy your week, and we'll send you another video next Monday.